Market update. Today is April 11th, 2020. Saturday, right? Because yesterday felt like a Saturday. Today's Saturday, late afternoon time. So by the time I get this done, processed, unloaded, you're probably gonna watch this either Friday, Saturday night, or Sunday morning. Thank you for tuning in. I hope you guys had a good week trading last week. We did see some positive activities in the market where we saw a follow-through move this week. So, and I think that's a good thing as far as trend is concerned. At least in the minor term, we do have higher low. We're looking at S&P 500 ETF spider here with the low. We got the higher low there. In the minor term, we got the low, higher low. We got the high, higher high. And this is the first time we're seeing that. It's the first time we're seeing some follow through. And when we even go to weekly here real quick, and you can see looking at this weekly chart that this is the first time we're seeing 3-week follow through, right? We had a one bullish engulfing candle there on the weekly chart. We had a pause, resting candle there, and then you can see the huge weekly bullish candle, and that's really good to see that we closed the second, or this is third week strong after a huge dive there. So let's go back to daily chart, trying to figure out what we can expect going forward. But before we dive into this, I'm sure some of you guys are wondering about this chart, and we've been talking about this chart since the lows back in 220s on Spider. And obviously this is Dow Jones Industrial Average and going to 1962, right? So we're pretty much kind of comparing this to today's sentiment on the Dow, right? So this is back in 1962, and we've been covering this every week, and I'm going to continue to update you guys on this chart every week going forward. So that was the resistance there. We broke out, we failed, we broke this low also, right? So there's trap on both directions. There's trap to the upside and there's trap to the downside. And this is very deadly because a lot of people who are trying to go long here on a breakout, they get trapped. And a lot of people who, even long-term investors, they might be setting up their stop somewhere below that. They closed out their longs, and then market reversed on you. I think that's probably the worst thing that could happen to anybody, is that you got stopped out, you close out your longs, and you feel good for a month or so, a couple weeks. You're like, okay, I think there's gonna be a huge recession, it's gonna come, and then the market continues to march higher, and it really paralyzes you because you're like, well, can I get back in? And that's one of the things is that people always say stuff like, well, I want to get back in when things look more safe. Right? Things look more safe. And I talked about that last week. That's actually not the case. How many people thought after, even just going forward here and here, right? After this kind of 12% decline with a 6 months nice base, a lot of people didn't want to get into it here. They want to go after it looks like it's quote unquote safe, and then you got hit. And then a lot of people close out their longs here with loss, and they want to wait until safe. Well, you go long up here and then this. But what if you faithfully bought it here, maybe here, and then you here. You're not doing too bad as long as if you're long-term investors accumulating stuff down here, right? So that's the thing about it is a lot of times when you think it's safe to go, it's actually more dangerous, especially the environment we've been in the last couple of years. And so I actually think that approach has to be you look at it in a different way. When there's fear, I think that's the time that you want to accumulate, especially if you're long-term investors, right? And I'm not saying nobody can completely find bottom exactly where it is, but even if you're able to go long anywhere in that vicinity, maybe you went long a little early, you added a little more here, and then you bought some here, you bought here. It's not too bad if you can look at things in a long-term perspective. But anyway, let's go back to this chart right here. So this is from 1962, trap both ways. Had a big run there. Let's look what it looks like today. Again, this is Dow Jones here. I just screened it today. Dow Jones sitting at 23,719. So I can do this and I can do that, right? So that was trap That was trap long. That wick is wicked long. That is a wicked long. That was some wick there too, but this wick, that wick, the lower wick, that wick is not as long as this one. That is some big long wick there. But you can also see here how that oscillator hit that extreme oversold level. This is a monthly chart. For a monthly chart to come all the way back down to that oversold level, that's extremely, extremely oversold. And you can see that's where we're bouncing here now. And you can see that we saw the wick there. And again, this is chart from today. And very, very strong bullish Hurami type of monthly candle is developing so far. Again, the month has not been, solidified. The monthly candle has not been solidified, meaning we still got couple weeks to, 2-3 more weeks to go, right? So we got April, we got like 3 more weeks to go. So we don't know exactly how that monthly candle is going to look like towards the end of this month, which I will apprise you towards the end of this month how that looks like. But so far, it looks like we are kind of, we came down, kind of trapped a lot of longs and shorts at these levels and bouncing very, very fast here. And so if we compared it here, we saw similar activity here. You can see, so there was some retest. So that's kind of what I'm trying to figure out is that, are we going to, okay, so we saw the long lower wick, and then we saw that, again, market is, I have to say this though, just because we're looking at things with we're comparing things with 1962, does not mean market is going to do exactly like it's done in 1962. The market does not repeat, it rhymes. So it may do something different. There's a chance that we could potentially V-shape. There's a chance that, we do something different. You know what I'm saying? So, but this is just so that we can kind of get a good feel of how the market behave in an environment like this, right? A steep decline, traps on both directions, and then there's some consolidation and that thing thrived, right? So you can see there was that green candle there, similar to what we are seeing here. There, that's green candle. So I'll keep an eye on it, and I'll update you guys potentially every week and see how that plays out, or maybe I'll wait till the end of this month, then that monthly candle will be solidified and we'll go from there. And I got another chart that I want to share with you, is this chart, and I've been tweeting out about this chart here. And so basically that's what I call rising pivot, right? That's been acting, that's 2007 high there, and that's a 2014-15 high, and then that's 2019 lows, and that's 2020 lows. So prior resistance potentially acting as new support, and that's a rising pivot, and that's rising support. So when you look at monthly chart, you can see that that's 2019 lows, 2011 lows, 2016 lows. Look at that long lower wick. I think even with a lot of long-term investors looking at the chart here, because at one point, did you know that one point if you looked at this chart, this monthly chart, sometime in March, it would have looked like this. Very, very scary, like that. Long, scary, just, bloody, long candle without it. That's what it's gonna look like, in the middle of March or late March or something like that. And a lot of people looking at this chart, they knew that this thing broken below it. Probably a lot of people panic sold a lot of their long position. If not, they completely exited their entire portfolio, even long-term investors looking at things like that. And then you can see how quickly it got recovered. And isn't that interesting? When that long bullish candle actually developed, it started right on this level, right on it. Do you see it? Just right on it, right here. So if this becomes a massive trap, we don't know it for sure yet, but there's a good accumulation occurring here. Even looking at this monthly candle, similar look to 2019, if that was a massive trap for longs and bears, right? For longs to get out, close out their entire portfolio with loss, and shorts to aggressively short even more, thinking there's going to be a huge, more and more downturn. A lot of people getting whipsawed, trying to maneuver through it, right? And you can see how quickly we've gotten back up here. So I think so far so good as far as this candle is concerned. Again, that being monthly chart, we have to kind of update. I would have to look at it again towards the end of this month, how that monthly candle is going to be developed. But so far, we are holding rising uptrend support in the primary term and a rising pivot. As of today, we have to give benefit of the doubt to the buyers in the primary term for the fact that we are still in a primary term bull market. Despite what you hear in the media and anybody else that we're in a bear market. Remember, people thought there were a bear market in 2019. People thought there were a bear market in 2016. People thought we were in a bear market in 2011. And if you've been listening to me, and I told you guys that we were not in a bear market in 2016. I also told you that in 2019, we're not in a bear market. We're not in a bear market either today. Because again, what is the definition? If you look at things in a primary term perspective, if you look at things like intermediate term, yes, you can call that is bearish. Bearish intermediate term downtrend. Short term, yes. But long-term perspective, in a primary term perspective, we're still putting in higher lows. And some of you say, well, what about this, K? We got the 2019 lows, and then we got the 2020 lows. We did the same thing, similar thing here. In 2015, we got the 2015 lows, and we got 2016 lows. You know, like a little double bottom, right? But what's important is that we're holding some of the most pivotal levels here. And this important level, we needed to hold it. And I was actually watching that. I saw this thing coming below that. And then I was hoping to see that some kind of buying activity too. That's why I shared you this chart. I shared you this chart on the worst time in the market back in what? Like, you know, when the spider was at 220. Remember that? So I shared you this. Well, I told you guys that I am looking for a lower wick. You guys remember that? I am looking for lower wick because I saw this and I am looking for lower wick. That's what I was looking for. That was the first step. I wanted to see, because if this is going to become some kind of trap, right? People are panic selling at this level. You know what happens when majority of people are panic selling? Market's really good at just going right back up, leaving those people behind, right? And that's kind of what I wanted to see. I want to see a lower wick. And then we saw that. And when that happened, not only it helped with, you know, this chart on the monthly on the Dow, but it also helped on the monthly chart on the S&P, because now we can actually categorize. Because if you go to line chart, here, go to line, look at that. When we look at a line chart, you can see, because line chart is different than a candle chart, right? Line chart is only going to show the end of the month result. So when you look at this is a line chart, guys. When you look at this line chart, can we all agree with each other that we're still on an uptrend, right? Look at that. We got these lows. You can see how stocks do make new highs and then pull back, you know, near to that prior low, but it never breaches below that. In a monthly closing basis, do you see that? That monthly closing basis, we never breached prior low. I mean, this is a prior low. That's slight higher low. That's a prior low. That's an equal low. That's a prior low. That's slightly higher low. Monthly closing basis, we are still cultivating higher lows and higher highs. And when that happens, we have to categorize this market in a primary term, though. In the primary term, that we are still in an uptrend, we're still in a bull market in a primary term. Bear market in an intermediate term, yes. Intermediate term, we're in a bear market. This is intermediate term bear market. Intermediate term bear market. Intermediate term bear market. Intermediate term bear market. Primary term bull market. Does that make sense? Let's continue here. So right now, I got a couple moving averages here, and if you want to put that into your chart, that's fine. So what I got is we got 50 EMA. I got 150 SMA and then 20 EMA. Again, 50 EMA, 20 EMA, 150 SMA. There's a reason why I chose 150 SMA, because if you look at 150 SMA, I believe 150 SMA is, yes, 150 SMA setting it low, 20 EMA setting it close, 50 EMA setting it close. So the 150 SMA setting it low, you can see how it acts as a support, right, back in 2019, and then it acted as resistance in early March. So that will be important moving average to keep track. And then we got the 50 MA, and that's kind of where we're stalled a little bit on Thursday. And then 20 MA is also important because the 20 MA is what made that 4% gap down, last week. Was a week before. You saw that was a 4% gap down. And it's very important about that 4% gap down. I think a lot of people got trapped with that 4% gap down. What happened was things just went straight up. And I remember in late March, a lot of people were talking about a retest of the lows. Retest of lows. So when this thing gapped down from here to here, a lot of people fled. A lot of longs fled. A lot of shorts start shorting it very, very heavily, expecting this to at least come down and fill this gap and retest the lows. Because I remember in late March, just Twitter was flooded with people calling for retest of lows. Potentially, this is a bullish. It's a bull rally within a bear market where this thing's gonna go lower. And so then when that gap down happened on April 1st. I remember how much fear, because it kind of reminded of the flashback of what was happening. Just limit down every single day. It kind of that flashback came back to the fear came back into investors. So when that 4% gap down, I think everybody was trembling. Like everybody was panicking, right? The longs were panicking, shorts like just aggressively shorting. And then we hang there a little low, like 3 days. I think that was a killer because that looked like a bear flag. And a lot of people were expecting to downs. I remember last video I said, I don't go by that. I don't know what's gonna happen. It's either gonna higher or lower, I'm not sure, right? Because I don't go by this short-term indication, this short-term, bearish flag. That's what a lot of people are looking at, a bearish flag, and a lot of people are looking for another leg lower. And that's not always happening. This is why I don't go by these short-term indications. And then when it gapped up, I think a lot of people are in shock. I think a lot of people are in shock, right? I think a lot of people are in shock because I don't think anybody really, was able to expect something like that. So a lot of things actually happened. For the first time since this plunge, we have 20 EMA curling up. You see how 20 EMA was coming down, and that's where 20 EMA found resistance, 4% gap down, 5% gap up, continuation. For the first time, the 20 EMA is curling up. So we're seeing some short-term momentum shifting to bullish. But intermediate term, well, that 50 EMA right here, that's still turning down. This is the reason why I said we're still in a bear market in the intermediate term. So it will be important how it deals with it. Do not be too precise with this level. Just because it gets a little bit higher, that doesn't mean it's going to shoot up. It could hang around a little bit. We still got gaps that needs to be filled. And there's a few things also done is that as the bulls gone up, bulls opened 2 gaps here. As I tweeted out last week or this week, that's island gap. That's breakaway gap. And on the last video, I said we need to first see a follow through. We do have this gap, but can we categorize the gap as a breakaway gap? We don't know that yet. We need to see how it's going to deal with it. When this island gap came about and it's holding up so far, that's been sustained, meaning it hasn't been closed. Yeah, my chart says there's lower wick, but it's not. You can see right here, this is a 65-minute chart. So that right there, that's definitely an island gap there. So now we can categorize this, we can label this as a breakaway gap. We can categorize and label this gap as a what? A continuation island gap. Island gap is one of the strongest gap reversal, especially when it comes to another gap behind it. So these 2 gaps being open quite some. The longer they stay open, the better it is going to be for bulls. So if we stall here, we pull back, maybe we get up, fill the gap or whatever. But the filling the gap is the first step. When the market stock comes down like this, when the index comes down heavily, like there's a gap, there's huge gap down, there's huge gap down. As the market starts to march higher, it cleans out, it fills these down gaps. As it opens the up gaps, that is a very, very constructive move as far as the short term is concerned. Obviously, short term, we have a good bullish momentum. That could turn into intermediate term momentum. That could turn into primary term momentum. So we'll have to see how the market is going to play out going into the next couple of weeks. So if we stall at 50 MA, this thing comes down 266, which is going to be met with the 20 MA. 266 is going to be first support to watch out for. And 257 is where this thing is going to come and challenge this gap. It would be better if we do come down, it would be better for bulls to challenge this gap but defend it before bounce higher. If the gap gets filled, it's not as bad. It just would have been better if that island gap is not filled and stays open for this thing to really find momentum. However, if this does get filled, probably going to act as strong support for the next run higher. So I think at this point, the worst case scenario, in my opinion, in the short term is 247. But I kind of, if we do see a pullback, I think 266, 257, we may find some pretty solid support there. And that's kind of what I'm thinking. Again, to just reiterate, I think we're going to be in bullish zone at 292 and 302. Does not mean that if this thing poke its head up at 307, does not mean that you're free to just go all in and it's going to go 340. I'm not saying that. If the price can stay above 300, 290, and hold above it, we may see some kind of up and down shenanigan. If we can do that, I think 340 is going to come pretty quickly. That's what I mean when I put bullish zone at 300, 292. There will be shenanigans in these levels. There will be up and down. But what we want to see is we want to see this level hold. Price is holding above it. Buyers coming in, buying these dips when this thing price go higher and start pulling back, which I'll be doing also. So right now, I think, in a minor term, there's a good momentum going for bulls. In the intermediate term, there's still a lot to, for the bulls to, do to make this into an intermediate term uptrend. In a primary term, we're holding up well here. Definitely nice bullish candle so far, but we have to see how the end of April is going to look like. So that's kind of what's going on as far as the market sentiment is concerned, the price action, and the momentum that we're seeing here, right? So let's see how it plays out next week. So you guys have a wonderful weekend and good luck trading next week.